Signed up to Alpha Capital about 7 months ago because a trader I follow and still follow, and still respect to this day, would promote them in all his videos. And you could get a 30% discount if you signed up with this code. Just a side note, if there's always a discount or promo available, then there's not really a discount. They've just got a good sales team. Now, I knew I should do some sort of due diligence because you hear of all the prop firm horror stories, but to be honest, I had absolutely no idea where to start and what I should even be focusing on. Now, I'm making this video as the first of potentially many sort of prop firm reviews because I know a bit more now. I've gone through the evaluation, passed the evaluation, and I'm a qualified analyst with Alpha Capital Group. And so I hope this helps some of you navigate not only Alpha Capital and some of the rules they impose on traders during the valuation, but also once you're a qualified analyst. And I think for anyone who's in that stage of their trading journey, navigating prop firms, whether you are funded or still in the valuation, whether you're with one or multiple, I think there are common behaviors and practices one should adhere to, regardless of which individual prop firm you're with. My name is Samkelo Mfega, and this is The Modern Day Trader, where we document our journey on the path to become consistently profitable traders. I've been trading for 8 years and am a six-figure funded trader. And my intention is that, the lessons I share from my own journey help you navigate your own as you work towards either being funded or maintaining, consistency and profitability if you already have it. Let's get into it. So none of what I'll be sharing is confidential information. It's all on Alpha Capital's website under the frequently asked section, which we either never check or, we never know what's important to check under the section. So I'll really just be going through very high level, the different sections in this frequently asked question, section, and just pointing you to some of the more important rules you should be checking out if you're considering Alpha Capital or if you are already with Alpha Capital. And I think the onus still remains on you to make sure that you check out all of these rules, or at least the ones you think apply to you, because, some of them don't apply to me just because of my trading style. And so, there's not a scenario in which I would violate some of these things. That's why it really comes down to the individual trader. And this will just highlight, I think, the points that are relevant to most of us across the board, but make sure you are checking this out on your own because this isn't, a sponsored review for Alpha Capital or, I take no liability in any actions you decide to take following this video. So, I'm going to cover things under general, the alpha plans, the valuation, as well as the qualified trader section. And so starting with the general, I think an important one to note is regarding third-party payments. Looking at some reviews and, some complaints, I think some people misunderstood this. Technically, the account you create with Alpha Capital should be the account which, or the main account holder for whatever payouts you'll be processing. And so if you create, for example, a account on Alpha Capital under your own name, but then, for example, you want to withdraw into a company because, that's more efficient from a tax perspective, then they basically won't process this payment or reject it because, it's not the same individual. Can't withdraw into, a family member's account or whatever. If you are going to put your details as the main account holder on Alpha Capital, make sure that corresponds with where they will be processing payments because, it comes down to your KYC. But read that in detail. The next important thing, which I highlighted in the Daily Nuggets this week, is are you trading with real funds? No, it's all pretty simulated. You're basically trading on demo. I've actually seen this across the board with prop firms, so it's apparently not something new. I think with your commercial prop firms, it's obviously common. But yeah, once you get into your more or not commercial, but more your retail prop firms, I think with your institutional prop firms, it's a bit of a different game. But you're essentially trading demo, the entire time. And so hence, they call it a performance fee payout as opposed to, a profit split, because I think that can be misconstrued as, you're trading real funds when, you actually aren't. Make sure you check out the section on, banned countries and limitations. This may apply to you. I think you'll just have to see what prop firms do allow your country if this is the case. Tradable assets is also an important one. I remember when I signed up initially with Alpha Capital, I was only trading 4 pairs. All Forex, one of them was an exotic. It was USD ZAR. And, I'm from South Africa, so, I follow some of the macro stuff here. And I enjoyed trading that pair and was learning its tendencies, but then couldn't trade it once I got to Alpha Capital. So if you do trade, limited assets, or just one particular asset, just make sure that it's listed here before you sign up, because that's obviously going to flip everything on its head. If you sign up and you find that, your asset isn't listed. Check out what the prohibited strategies are on Alpha Capital. This doesn't apply to me. This is one of those things where I think I trade in such a manner that's quite sustainable and, doesn't really flag any of these, shorter term, sort of high frequency type strategies. But, all traders are different. There's a range of strategies out there, that work. And so if you feel that your strategy may fall under one of these categories, then make sure you double check this. Now, coming on to the Alpha plans. So I'm on the Alpha Capital Alpha Pro 10%. Which is basically phase 1, 10%, phase 2, 5%. Your max drawdown is static. Max daily drawdown is balance-based. So assuming that's at the end of each day, it looks at your balance, and then, your max daily drawdown is calculated as 5% of that balance. The Alpha Pro is very similar. Only thing is the targets are slightly adjusted. So we've got 6% on phase 1 and 2. Your max daily drawdown is 3% now, and that's calculated as the higher of either your end of day balance or equity. So your equity normally floats just based on, what you've got, positions you've got open. So if you're in a drawdown, then, your floating equity could be lower than your balance. In that case, they'll use the balance to calculate your max daily drawdown. I think as a side note, wherever something seems more attractive, there's usually stricter rules around it. So, with the Alpha Pro, 6%, yes, it's a lower target. For phase 1, I think overall, because, on the 10% at least, it's 15% overall target. This is 12%. But then your max daily drawdown is, a lot lower, and a bit stricter rules around news. The Alpha Swing, in my opinion, is probably the best account and what I would have signed up for. But I think if I did, I would regret it even more now, because while this all looks good, 10%, 5%, max drawdown static, it's all the same. You can hold over the weekends during the evaluation, and when you're a qualified analyst, you can trade through news. This account is only available with the on-demand payout type, and that for me is what makes this just not even worth the effort. I'll explain the on-demand, performance fee type a bit later on, so stay tuned for that. But this is a really good account when it comes to the rules around it. I'm confused at why they make it only an on-demand performance fee type. I assume because most people would be on this if that wasn't the case, just because it allows much more flexibility. But, that's just made it null and void in my opinion. The benefits are not worth what you have to do to maintain, the account or process a payout. Alpha 3, I think, promotes the most sustainable trading. 8% for phase 1, 4% for phase 2 and 3. Your max drawdown static at 6%, which is tight, still quite tight because you can. My max drawdown at one point was close to 5% on phase two, but ended up passing the challenge. So yeah, that's very tight. Probably the only downside of this. But yeah, a bit stricter around like news trading, just with a 5-minute window on each side. But yeah, you can hold, over the weekend during the evaluation and once you're funded, which is pretty cool. Alpha One is their one-step evaluation. So you've got one 10% profit target, and then you're a qualified analyst if you achieve that. Only thing is the way they calculate their max drawdown uses a high watermark, type feature. And so just read that a bit just to understand it. Here's where they get you. So if your 6% trailing max drawdown gets adjusted to the initial balance, so in a situation where you are 6% up in profit, which you will get to at some point if you plan on passing the valuation, then they advise you to leave a profit buffer on your account if you want to continue trading it. So if you want to process a payout, they're advising you don't take out everything. So if you do want to take out everything, then you get withdrawn and paid, but then they close your account after that. And if your account has less than 6% profits and the 6% trailing max drawdown hasn't been adjusted to the initial balance, you can request a payout of all the profits, but the max drawdown will remain unchanged. I wouldn't select this plan, but I guess there's some people where that might work for them. So during the valuation, I really just want to highlight differences between this and the qualified analyst stage where you are funded, because I had a lot of praise for Alpha Capital throughout the evaluation. I think the environment was just perfect, at least for the way I trade, and maybe that's why I navigated it quite nicely, both in drawdown, but then from an execution perspective, you can hold over the weekends. There's no lot size limit. That doesn't really apply to me even now because I'm quite conservative on risk, but there's no lot size limit. There is a minimum trading day of 3 days, and you can hold during news events. They're not strict on trading news. It's a lot more flexible and relaxed. My plan already doesn't account for executing trades, during high impact news events, but you could if you wanted to. That kind of just completely flips when you are a funded trader, which is what I don't like about, I guess, the experience here, is that you're trading in a very different environment. Okay, the minimum or maximum lot size and margin doesn't really apply to me, but just the action of not being able to hold over the weekend. That's something when you're more of like an intraday sort of bordering on a swing trader, that it impacts your bottom line, because I can take trades, or I usually take trades right up until like a couple hours before market close on a Friday, if that's when a trade forms as per my plan. And so, not being able to hold that anymore is forcing me to close trades prematurely. And, I haven't got enough dots to say how that's, impacting the bottom line, because I've gotten a mix of results. Sometimes, the market opens and it's at my TP. Other times, would have opened and then stopped me out. So I'll see how that affects me properly over time, but it will affect me to some degree. The thing of trading during news, I'm having to tiptoe now through the week, because, there's that much more restriction in terms of when I can execute. And I think more importantly, when I can close trades. I understand not being able to execute within like a 2-minute window. But when you come to some of these, news announcements, when you are a qualified trader, can I trade news? And you can see that during assessment, you can trade freely. After you pass and you're a qualified trader, then you have to be careful. You can't trade within, this 4-minute window. And that includes trades which you were holding before the 2 minutes of the announcement, cannot be closed And we know sometimes there's volatility during a news event. If my take profit order gets triggered, it gets triggered. I was holding the trade like 3, 4 hours before the news event. It had nothing to do with that announcement. The trade is just completing when, the announcement is released. And so why am I getting penalized for that now? If I took the trade, 15 minutes within the news event, then yeah, I'm leveraging the volatility from that time. But I think that's a bit too strict and a bit too harsh, and something that, look, I'll have to adapt to, but I have no choice. I do have a choice, but and I'm choosing to stay. So I'll have to navigate that. But read this section in particular. I think there's a lot of them, and we're going to get into the payout section now, but this section in particular, I think, is going to be a headache for a few of you. And just decide before signing up if that is something you want to work with, or if you are willing to kind of look past that. So in terms of performance fees, there's two options with Alpha Capital. You can either choose the bi-weekly option, which I've selected, or you can choose the on-demand option. With performance fees paid bi-weekly, from the first trade you execute, you are able to process a payout every 2 weeks after that. And so you have to be minimum $100 in profit to be able to process a performance fee. And there's a minimum 5-day sort of trading period that you have to go through. They've made it a lot more difficult to, I think, gamify the system when it comes to these things. So you can, but and there'll be small links that you don't recognize. So you might see that it's a minimum 5 trading days. You see how they calculate it. You can replicate that. Obviously minimum lots, which, okay, they mention it here, but it's not just about opening a trade, waiting 2 minutes, because there's also a 2-minute minimum trade duration that you have to adhere to. It's not about just doing that and then, closing, and then that's recognized as a trading day. If, you just open up the minimum lot size, that you have to, trade lots within a range that you've been trading already. And so arguably you have to risk, capital that will impact your bottom line, whether it's 0.1% or, 1%, depending on what you usually trade. If you usually risk, 3%, then, you have to risk something within, that region. I know they use a lot size example here, but read the risk management section of this. There's this small connections with these rules that I think the prop firms are really smart with when they set them up, to make sure that there's some level of consistency in the way you operate. And I don't know, I just think that's a bit, you expect it of me, but you have not behaved consistently in terms of the conditions you've set for me in the evaluation, as well as then, the qualified trader series. And I get it why you do it, because, people always find the loop and, they want to work around these things, but then it just makes it really difficult for genuine traders who have been trading sustainably and consistently throughout the valuation. It changes so much for them too now when they get to this next phase. And I think it's a bit unattractive, in my opinion, and makes it questionable and whether I will want to continue scaling on this, depending on how difficult navigating some of these rules are. And so that's the bi-weekly option. The on-demand option, which I think is just crazy and just not worth it, to be honest, is available on most of the accounts. You process a payout whenever you want, but you have to, 1, adhere to the 40% best day rule, and 2, have minimum 2% of gross profits on the account balance. What is the 40-day best rule? It's basically a consistency score of sorts. So the rule states that no single trading day should contribute to more than 40% of the total generated profits. So if I earn $1,000 let's say on a particular day, a Tuesday, and Thursday is my payout day, they will reject that payout because all of my profits were generated on one day, which is insane. So only once the total account, so if my max profit on one day was $1,000, then only once the account balance exceeds $2,500, because $1,000 is about 40% of that, will then I be in line with this consistency score. So it's not really about $1,000. It could be for $100. Then I need $250. So you'll basically just have to look at your highest, whatever day you achieve the most profit on, relative to the total account balance. And was that day more than 40% of what you have in your account at the moment which you process a payout? I'm not going to touch too much on like merging and scaling now, because I think that speaks to, I think, your strategy and plan to scale capital as a trader. I think there's a few ways you can approach that. And so I think when I have a better understanding of how I want to position myself, then I'll dive into those two categories and maybe make a separate video on that. The risk management section. Like I said, there's some things that apply to me, some things that don't. This is kind of just one of them, because I'm very conservative in the way that I structure my risk. And so I'm never really using the maximum sort of lot sizes, or I don't think I'll ever be flagged for, leverage reduction. But these are things that will affect some of you, dependent on your risk management approach. And I think, a lot of attention just needs to be placed here and understood before you proceed with Alpha Capital. I think it's important to note that, prop firms are just not out to get you. That's a lame excuse for being too lazy to read the rules and just, stay sharp enough to abide by them, because they are fully disclosed. There's nothing that, Alpha Capital are hiding, or, any of these prop firms. I think they're still an excellent tool to leverage. And that's really the key. They're not the end goal, but should be leveraged to build personal capital, or to build, credibility to manage private investor capital. If you want absolutely nothing to do with them because of these rules, then, you're not obligated to. So I hope you enjoyed this episode. Please hit that like and subscribe button if I provided any value whatsoever. And remember that consistency is the choice you make when you start doing the things you should be doing day in and day out.